Thank you, Srini. It's really mouth-watering prospects. Okay, so we have 10 minutes of Q&A. Okay, sorry. I'll start with Fred.
Hi, good morning. Fred Boulan from Bank of America. Quick question on all IP. This was a major focus from the previous management for your footprint. I think you've completed the all IP migration in a number of markets completely. Can you tell us a little bit about the benefits you're seeing from a product delivery perspective, incremental ARPU, incremental cost savings you're seeing, margin impact, etc., and for us to see how we can extrapolate that across your footprint, but also in other assets, including Germany. Thank you.
Look, I think all IP is largely done. We're 71% done. Greece, we made a decision to move it back because we prioritize vectoring. We get about 48 million euros a year of saving from all IP. That's pretty much bang on what we had expected when we set down that journey. A lot of that saving has come through things like provisioning, just taking out some of the waste in the process, which you have in an SDH network. In terms of agility, I think we have seen an improvement in time to market on broadband provisioning. And if you take some of our markets where the rollout is most similar to Germany, then we've seen exactly what Claudia talked about yesterday, which is, you move into a new house, you're able to plug in immediately into a broadband infrastructure versus a long, lengthy acquisition process. So those would be the headlines. Cost savings, pretty much bang on. Improvement in broadband time to market that we've seen. ARPU is really hard to separate out the all IP impact of ARPU versus things like convergence. It's a bit artificial to do that.
And what Srini was talking about relates to the network expenses that we wanted to save. So when you do the math, you find it's pretty consistent with what we have previously indicated. And Claudia has also talked about this yesterday. So Steve?
Yeah. Yeah, hi, it's Steve Malcolm from Marriott. Just a couple. Can you just update us on the deal approval processes in Austria and Netherlands? I think you mentioned Austria, you hope to get done quite soon. And I guess your tolerance to remedies in both those markets and what you're expecting. And also, thanks for laying out a really joined up sort of thing, your thinking on Europe. But I guess one of the reasons that you maybe trade at such a low multiple is concerns around capital allocation, and it's maybe highlighted in the UPC deal. Can you just explain to us, why you feel comfortable paying 11 times for a flatlining business versus your own 4.9 times multiple, and how you're comfortable with pro rata synergies that look even bigger than Vodafone's announced in Germany for a cable deal, where you don't think they can migrate the DSL customers to cable, you don't even have those customers. Thank you.
Okay. Look, let me deal with two parts to that. One, where are we on the deal approval? Actually, Torsten will talk more about Netherlands, so I won't talk about Netherlands. We have filed for deal approval. We would love for that to be a phase 1 approval, which would mean that would happen this summer. But it's in the regulatory process now, so it probably doesn't make sense for me to comment any more on that, other than this is not a consolidation. This is a FMC merger, and we've seen the Tele2 dry move in Austria get waved through, so I'm hopeful. In terms of the actual synergies itself, look, there's a big source of synergies of putting our asset together with UPC, which is outside of kind of the SG&A and the just putting two organizations together, which is we run a large FMS business, right? And when an FMS business starts scaling, the requirements of that from a capital intensity perspective, FMS is great from, when you start, right? When you start scaling it, the requirements from a capital intensity perspective are substantial. And one of the big synergies for us as we move on to a cable network is also that factor, which is you now have access to cable, which changes the capital intensity versus putting CapEx into building out the FMS network further. When we look at the deal as a whole, the way we evaluated that deal was it was worth paying that purely driven out of the cost synergies, and Hannes will remember the numbers, but broadly I remember 50% is what we'll end up keeping versus 50% is what goes into the deal itself because of that structure. So there's cost synergies and there's a big network synergy in that context.
It's a very good asset. Andrew?
Yeah, thanks. It's Andrew from Goldman. Just a question on the cross-border synergies you talked about, which we don't actually hear about a lot at the moment. Could you talk about whether those cross-border synergies or your ability to develop them is going up? And could you maybe put that in the context of digitalization? Is digitalization really driving that?
Look, I think cross-border synergies is it's often easy to focus on the hard synergies, which is, what cost did you save by putting this together? What does common production mean? I think there is some of that, as Czech-Slovak proves. But I think the biggest source of cross-border synergies are actually much softer, and I'm glad you picked on digitization. Look, if you're going to try and build one app across 11 countries, you never have the skill to do that. Our ability to hire someone, who's built a scale app before, if we're hiring them into Montenegro, is very limited, right? And this is why the whole central model of thinking of the group function as a private equity function, which allocates resources and brings those scarce people and skills to the countries, is a huge source of the cross-border synergy. So if you are Facebook, you're not going to build 11 apps for 11 countries, right? So what we've done is built one app that we will roll across the 11 countries. Digital, a lot of the digital skills tool set will follow the same process. So a lot of the digital tool set will be built on top of our homogenized API layer. And the homogenized API layer was built centrally, right? So a lot of, as you go into a more digital world, a lot more of the cross-border synergies tend to be the softer stuff around getting the right people, getting the right skills, being able to get access to the world's best in terms of technology and thinking.
And IoT.
Yeah, IoT will play out the same way. I mean, as we think about, what's the next step on digitization? We talked about seamless connectivity. Again, those are things which once you have a uniform API layer, you can put a lot of that stuff on top.
So just to summarize, that's driving up the benefits of cross-border synergies.
Yes, sorry. Yeah.
George?
Just a couple of questions, please. The first one is around the changing dynamics in some of the key markets. So PPF acquiring Telenor, Vodafone, Liberty, Digi entering Hungary. Does that make your job harder? And what's the logic, you think, behind some of these moves? And secondly, when you are talking about the fiber rollouts, perhaps the cheapest one to roll out is Romania, and you've done 3 million homes. Whether return's not good enough, why not Romania being part of the rollout?
Very good. Okay, so let me take the Romania question first. Look, I think in Romania, we were late to the party, right? By the time we rolled out our network, we were overbuilding cable. Not one cable. In that case, you had kind of UPC. You then had RCS, RDS with fiber through the window, right? You had 3 cable assets quite often, right? And we were the 4th overbuild, right? We have a large footprint now in Romania. My focus is on monetizing that footprint. And like I said, there's a bigger price for me, which is attacking a large mobile profit pool, where we are really small. We're kind of 15 to 18% share of that postpaid market, which gives you a sense of how much upside there is on driving mobile there. On the changing dynamics, does it make my job harder? It certainly makes it more fun. But let me try and break that up into different pieces, right? So the Liberty-Vodafone deal, look, we've always been pro-consolidation in our thinking. What we don't like is monopolistic rights. So our objection to a lot of the questions in Germany actually have, like Dirk talked about, to do with housing associations and TV, right? In the rest of Europe, that issue doesn't exist. And I'm a firm believer in convergence and converged market structures. So I'm not worried about that. I actually think it'll bring a more rational competitor into the mix and create better market structures. PPF, again, everything we've seen we work with them quite closely. We do wholesale with them in Czech. Very rational competitor, focused on creating value for customers and for shareholders. So we think that's a good thing. RCS, RDS, look, more mixed bag. Romania, we've seen how it's played out. In Hungary, their real challenge is at what point in time can they build mobile, because they have a single carrier of 1800 megahertz, right? Now, my view on them is I respect them. I think they've done a fabulous job in Romania. In Hungary right now, there's an open question of when they'll build mobile, and that's got pushed out a few times. I wouldn't underestimate them, but we'll see how that plays out.
John?
So it's one question. So looking at the size of Europe, it's bigger than the German region. But I think from yesterday, you talked about they talked about the number of towers that would be added per annum.
Yeah.
And then today, fiber homes passed added per annum.
Yeah.
And they look, roughly speaking, half the size of Germany. Is there a particular reason or rationale?
Well, so firstly, it's the size of Germany in terms of people, not in terms of income, right? So we're fundamentally, I work in much poorer economies. And that creates constraints in terms of how quickly you'll go. And your fiber question is a different issue. My existing fiber coverage is already 17% in these markets. And so the rate at which I will build will be slower, right? But the difference between these countries is per capita income beyond a point, and that creates constraints. But the fiber question is a different one. My fiber build-out's already substantially more. In fact, it's much higher than 17% if I exclude Greece, because Greece has actually got not very much fiber. In the other countries, it's more like 30 going to 50.
Mathieu? That's probably the last question, sorry, because we're slightly behind. Okay.
Yeah, thank you, Mathieu from Barclays. I had two questions, please. First, coming back to the cross-border synergies, there seems to be a new area of synergies compared to the presentation that was done a few years ago in terms of the infrastructure. You mentioned data centers, for example, between the Czech Republic and Slovakia. Is that something that could be rolled out between other countries? And the second question has to do with your guidance. So you're guiding for revenue growth, you're guiding for a reduction in indirect costs, yet the margin expansion, or rather the EBITDA expansion, isn't material. Is that because you're reinvesting in the short term in convergence or on other initiatives, and then we should expect a reacceleration of EBITDA in the later years? Thank you.
Okay, so can I deal with the second bit first? Look, coming from a background of 3% decline over 4 years, I'd call 1 to 2% growth material. But that's just my view. But there is an element of this which is maintaining flexibility to make sure that as markets evolve, we are able to deal with it. I forgot the other question, cross-border synergies, right. So look, I think there has been a change in our point of view from a belief that cross-border synergies would come from common production. I think we're seeing some of that. We don't think that's going to be the heart of it. We think the heart of a lot of the cross-border synergies are still going to be soft. We think there are synergies in areas of infrastructure. We've taken our first steps with Czech and Slovak, and we'll evaluate where else we can bring the data centers together. The bucket that I had there in terms of organization is not just cross-border, it's also optimizing our organization within country and actually creating a significantly more market-focused versus internally focused organization.
Excellent. So thank you very much, Srini. That's exciting stuff. And next we have a coffee break.
Thank you.
Okay. Also for those on the web, so we'll be back in 15 minutes super sharp. I'd wanted to say 10, but it's probably not humane enough. So please be back on time. Thank you.